Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Hey, I am back from vacation. I had fun in Miami. We had a wedding in Detroit. Both were amazing experiences. I also got to do a book signing at the Source Booksellers in Detroit. If you are in the Detroit area, there are only like 7 or 8 books left. You might want to call and reserve your copy, your signed copy now, because you don't get signed copies often, right? If you ain't getting it directly from me, it's got to be from the source. And that's really it, because I think all the rest of them are sold out. So if you are in the Detroit area, call them, reserve your book, go and pick it up. But today, we need to talk about Nike because I think Nike is a very important company for what may come next. Remember, we have earnings season in mid-July. July starts this week. I think it's like, what, Friday is July 1st? Yes, Friday is July 1st, which means that mid-July, when earnings season really starts to kick off, is just around the corner. Now, Nike reported its fourth quarter earnings right now. Now, remember, a fiscal year is not the same thing as a calendar year. Some companies want to be special and not start their year in January 1st. Apple and Nike obviously do this. I even wrote a whole article about earnings and 10Qs and all of the cool forms. Feel free to go check that out. But aside from all that, I went through and pulled out some things that I think are very important for Nike and what is important for us all. Basically, right, the economy is based on how me and you spend money. When we spend too much, we get inflation because we spend too much, there's not enough stuff, right? Too much money chasing too few goods. That's inflation. When we don't spend money or we don't have money to spend, you end up in a recession where things don't go well because we don't have money to spend, right? So we're trying to find a balance. And for me, because we don't have any other earnings to go off of right now, it is if Nike is okay, they're doing okay financially and people are still buying shoes, then we might be all right as an economy and we might not run into a recession this year. Now, notice what I said. I said this year. That doesn't mean anything for 2023. And obviously the year isn't over yet because there can be another random thing that pops up. But this could be a good solid sign that, hey, it may not be as bad as what we thought maybe just a few weeks ago. Okay, so here are the things that stood out to me. I'm just going to run through them and let you know, again, my quick thoughts about Nike. One other thing, remember my son is the largest shareholder of Nike in our household. So there's that. I don't personally own any shares. I don't think mom or his sister owns any shares either, but he's the biggest shareholder in the house. I feel like y'all should know that. He's been owning him since 2018. Which is when he was born. All right, let's go ahead and start from the top. $18 billion a share buyback plan, which we had talked about. We've talked about buybacks before. If Nike believes in its stock and they're going to spend $18 billion over the next 4 years on buying its own stock, I think that's pretty good. That's not a guarantee that the stock's going to rise by any stretch of the imagination. However, they have committed that much money to going back into the shares or into the stock, which again, if I am looking to buy, at least I know I got $18 billion that's going to follow me over the next 4 years. So that's one thing to kind of check and say, okay, that's good news. Okay. The next thing here is that their dividends, they've paid $481 million in dividends, which is up 11% over the previous year. That is a big thing for me because in this environment where the market is down, we were flirting with bear territory at one point in time. You're telling me that Nike, which is supposed to be a growth company, I say that because that's what they say on their website. Go to investor relations and actually say, we are a growth company. So that's what they said. There aren't that many, though. There aren't that many growth companies that also pay a dividend. We think of Amazon sometimes, even though they haven't really been lately. We think of Amazon as a growth company. We think of Google as a growth company. They don't pay dividends, but Nike does. And that dividend has increased by 11%. That's a pretty solid percentage. Now, Target also increased their dividend. If I remember correctly, I think it was like 25% or something extreme. At least it felt extreme. But it is something to take note of and say, okay, interesting. I like that. Let's say that it doesn't grow to the level we expect it to. At least I can count on a decent dividend to kind of, assuage my fear or at least my disappointment if the market isn't returning what I think it should be returning. So that's something that you want to kind of check off there too. But here's where things start to get interesting. Their revenue is the money that you bring in. Okay, it's not profit. It's the money that you just bring in. Their revenue rose by 5% to $46.7 billion, which is good. The majority of that money coming in came from Nike Direct. That is their online platform. So e-commerce is not dead. The other thing too is this was a strategic shift. If you recall, if you're into buying Nike shoes, which I'm not into many shoes. But aside from that, they're mostly like buy from Finish Line, buy from Foot Locker, or what have you. They have rearranged that relationship and said, look, we are Nike. We have the best brand when it comes to sports and shoes in the world. We will sell it ourselves. People know us. They'll come to our website and buy. That is where we saw the biggest gain in revenue. And I think that's something that's going to continue. But the other side of this is while your revenue went up 5%, your profit went down by 5%. Now, I want you to think about this, okay? Just think for a second. If I told you that Nike, one of the world's most famous companies, obviously making a lot of money, $46.7 billion. If I told you that you brought in more money, but your profit is down by 5%, basically equal. You brought in an extra 5, you lost 5 in terms of profit. How far up or down do you think the stock would be? Would it be down 5%? Would it be up 50%? Like tell me like right now as you're watching in the comments. Yes, right now. What do you think? How do you think the stock will respond or the company will respond if you brought in more money on the top, but you lost just the exact same amount, about 5%? And keep in mind, everything else that's happened this year. You've got China shut down. You've got Russia that you had to pull out of. You have inflation and higher shipping costs and all that kind of stuff. You have all these things going on. Your profit is down just 5%, even though you actually brought in more money. The answer is the stock is down about 33% this year to date, but your revenue is only down 5%. Despite all of those things, I see this as an overreaction to the stock market, and I see this as a good company. For you to only lose 5% in profit with higher shipping costs, COVID-19 still plaguing you in China, and not selling a thing in Russia, all at the same time, you only lost 5%. I think that's pretty good. And not to mention, that is more of a, if your revenue goes up, which means you're bringing in more money, but you're not keeping more money, that's really a cost issue. That's a cost issue, which means that it's really inflation. That's it. If you can bring that down a little bit and cut costs just a bit, you'd actually be even more profitable. I think to me, that's good business. That's saying, look, you've been able to manage your situation better than most. In fact, and then I'll just read this real quick. Their gross margin, that's the amount between what they bought it for and what they sold it for, decreased by 80 basis points. That's 0.8%. To 45%. So they make about 45% from what they buy things for and what they sell it for, which is pretty good. And that's primarily due to what they say, higher inventory obsolescence reserves. Now, I don't like all of the extra words they had to throw there, but what that basically means is you had more inventory. Remember, we heard this from Target. We heard the exact same thing or similar thing from Target where they couldn't sell a lot of the stuff, primarily home goods. But in either case, they have higher inventory they couldn't get out to people based on cost and based on shutdowns, which is saying that I had this shoe, I wanted to sell this shoe, but if I'm not going to wait 45 days for it to get from whatever factory to my doorstep. I don't feel like doing that, so it's obsolete now. I don't want it. They can't sell it. Okay, that is not going to be a permanent situation, which means, again, I think that revenue is set to continue to rise in the near-term future, and those costs are going to continue to drop or will drop so at some point in the near term. Inflation is not going to be here forever. Do I have a date on when that's going to end? No, I do not. I wish I did, but it's not going to be here forever. So that is something to note and to pay attention to. Again, despite all this, paid more in dividends, you got an $18 billion share buyback, your revenue is still up 5%, even though profit is down also 5%, and you're down 33%, that's an overreaction to me. That's an overreaction to me, and that says that you might be okay. Right now, this does not account for a recession. We don't know if that's going to be the case, but this tells me it might, if there's a recession, it might not be as bad as what the headlines are predicting, and Nike is at least well positioned to weather the storm. Now, if you're looking to buy Nike, I think, again, based on what I'm seeing right now, I think it's a quality company it's still down 33%. Okay, so that is still a thing. That does not mean that it cannot go further. But if I were looking to buy it, and I will probably buy more for my son, I'd really be looking at $105 or so. Maybe I wrote down 105.50 cents. If it drops down to that, you can do what's called a limit order and buy it right there at that price. That's not a guarantee that it will get to that price. No guarantee it can rise and just take off from now until forever. Is it likely? No, but that is something that could happen. Or it could drop down to $99 and just keep falling. You never know. But if I am more of a technical analysis, I really want to price my entry into this company. That's why we get it at. Excuse me. It is, to me, a good quality company. They clearly understand their situation, and they're managing at least better than Target. Now, I know they're different businesses, but they're managing inventory, it sounds like, a little bit better than Target. And again, a company that is solid. I know for a fact that I don't have to worry about Nike's brand. I'm not at all fearful for Under Armour replacing Nike as like the shoe company. At least not in my lifetime, right? Especially not over the next 6 months, the next 5 years, even the next 10 years. I'm not at all concerned about that. So if you're looking for something that is solid, that is going to stay on the straight and narrow, I can't call it recession proof or anything like that. I can't call it, would not consider a growth company per se. But I think if you're looking for something that you can understand, you can hold for a while. Keyword for a while, I'm thinking 2, 3, 4, 5 years. I think Nike's okay. I think Nike is better than okay. Just, I would give it a B if I were just giving a company a grade. And it's something that even if it runs a recession, even if the market continues to fall, Nike gonna be back. It's not something I have to worry about. And they are very, very financially astute based on everything else that we're saying. Because if you told me coming in January, we're going to have all this inflation, we're going to have talks about recession, we're going to raise interest rates, we're going to do all this stuff, and you're only down, your profit is only down 5%, I might take that. Especially when you've got people like, you've got companies struggling like Coinbase, companies struggling like Netflix. I could even say Disney is struggling to a degree. Even Amazon lost money from their last quarterly report. And their loss was a lot wider than what Nike is. Yes, different businesses, we totally understand that. But again, in a market like this, you got to snap up deals. And I think this is a deal if you are looking into it. All right, so those are my elongated thoughts on Nike. Stay tuned, keep it locked on the channel this week. As you know, this is my moving week. So on Thursday, not Friday, on Thursday is when I'm going to switch over some things in my portfolio. I'm going to do a video for our members only group. That link is below. There's a button like bottom corner of this video, and I'll probably put a box or something here, but in either case, I'm going to let them know first what I am buying, what I'm switching to, what I'm either adding or subtracting to my portfolio first. I probably will record that tomorrow, so members only are going to get it first. Everybody else, you're going to find out the day of. Okay, so I'm gonna tell you what I'm looking at doing, what I'm looking at switching over in my portfolio, and we've actually released a few other videos on AbbVie. We did a breakdown on that. I want to do one on Disney. If y'all want to hear one on Disney, let me know in the comments below. All right, so that was my thoughts. I'm happy to be back. I'm a little rusty. You can hear I'm stumbling over words and stuff. But sign up for the members only group. Let me know what you think about Nike. Let me know what companies you want me to break down. That's it for me. I'll talk to you guys later.